Other issues for 2021. Other issues for 2021. We're going to talk about RMD ages, that's required minimum distribution, and the ages that have changed last year. 2020 coronavirus related distributions, recontribution of retirement distributions, IRA contribution after age 70 and a half, and the qualified charitable distribution, QCD, the deferred self-employment tax, and whether or not to amend a 2020 tax return, the IP PIN update, that's the identity protection PIN, and we're going to talk about due dates. The new age for required minimum distributions changed last year. So the age for beginning required minimum distributions from either a defined contribution plan or an IRA increased to age 72 from the original age 70 and a half for individuals who reach age 70 and a half after December 31st, 2019. So anybody that turned 70 and a half in 2020 would be affected by this. So taxpayers born July 1st, 1949 through December 31st, 1949 will in fact turn 72 in 2021 and must take the required minimum distribution by April 1st, 2022. So we need to be aware of that. We need to be able to advise our taxpayers that they need to make sure that they take that RMD by April 1st, 2022. And certainly I think it makes better sense if they take it actually before the end of 2021. That way they won't end up paying tax on the distribution both twice in the same year. So if they take it on April 1st, they're going to receive another distribution at the end of 2022. So they're going to end up paying tax on two distributions. So it's better to take it before the end of 2021. 2020 coronavirus related distributions. In 2020 last year, there was a feature that allowed a taxpayer to take distributions from an IRA or from a 401k if they needed them for coronavirus related events that happened in their lives. And they had the ability to spread the tax on those distributions over a 3-year period by using Form 8915E. And if they did that, then they need to file Form 8915F for 2021. And I imagine there's going to be a 8915G for 2022. And they need to report the taxable amounts taxable in 2021 on that form. And so they need to carry all of this forward. We don't know at this point how TaxSlayer Online is going to carry forward the information from 2020 and then from 21 to 2022, but I would assume that they will indeed carry that forward and alert us to the fact that that Form 8915F needs to be filled out. But we'll have to wait and see. To report payments that reduce the amount taxable in 2021. So if the taxpayer has done any repayments of any of those amounts, which they certainly had the ability to do during the tax year, then those would also be placed on that Form 8915F and would affect the taxable amount for tax year 2021. One issue that we're going to be dealing with this year is whether or not to amend 2020 tax returns. Last year was a very difficult year for the Internal Revenue Service, and Congress unfortunately had enacted several features very late in the tax season. We had already started processing many tax returns, many 2020 tax returns when Congress enacted things like excluding the first $10,200 of unemployment benefits so that people were not taxed on those things. We had already processed some of those returns before that law was actually enacted. There was also an excess premium tax credit that people typically were required to pay back. Congress enacted a provision that allowed them, they were forgiven for having to pay that money back. So that also happened late in the season. And then we had a new recovery rebate credit. We had some changes in the EIC for people that don't have any children, and then the advanced premium tax credit. There were some changes there too. So all of these things happened very late in the season. And so what happened was the IRS, when they received these tax returns and they processed them, they automatically made changes in those tax returns from what we had originally done in TaxSlayer. So the taxpayers, as a result of this, would receive letters from the IRS indicating that these changes had been made. So what we're probably going to see is we're going to see these letters, and probably a fair amount of them as well. So when we start looking at their 2020 documents, looking back when we're doing the 2021 tax return, we're probably going to see these letters, and that's something that we certainly don't need to amend any of the tax returns that have these letters associated with them. What we probably should do, and there's a suggestion here on this slide, that we should go in and update the 2020 tax returns to reflect what the IRS automatically did in the processing stages. So it's not absolutely mandatory that that be done, but it is a good idea that our records coincide with the way the IRS actually processed the returns. So I think it's a good idea if we go back into the 2020 tax returns for these people and make the changes that the IRS automatically made. So we need to review all correspondence that the taxpayer brings us when during the intake interview process, and really keep an eye out for these letters. And then, of course, we have issues where we do need to make amendments, and that's on the next slide. There are some reasons, however, that we should actually amend that 2020 tax return, and those reasons are if the taxpayer suddenly qualifies for a credit in 2020 or a deduction that we did not give them on their original return, and the IRS did not automatically reprocess the return to include those credits or deductions, we should amend the return so that the taxpayer gets that benefit of the credit or deduction. Also, there may be impacts on the state tax return from some of the changes in the federal return. The state return may have been impacted by that, and we may need to modify and amend the state return and just amend that return only instead of the state amendment. We might have missed the look back. We might have missed the look back provisions for the earned income credit and the advanced child tax credit, where the taxpayer had the ability to look back to 2019 to see whether they had higher earned income in 2019 than 2020. So if we didn't get a chance to do that and give them the benefit, give the taxpayer the benefit of the higher earned income in 2019, then we should amend the return at this point so that we can get that benefit for the taxpayer. Second family leave credit. We could also look back to 2019 to see if the self-employment earnings for 2019 were higher than they were in 2020. And again, another reason to amend the return. So this year we may well see two different types of identity protection PIN programs. The IRS initiated a new PIN program just in the last few months that we may just begin to see people starting to use that. The original IP PIN program was if a taxpayer had a problem with fraud, somebody had stolen their refund or had filed a tax return using their social security number or something like that, then the IRS would have begun sending them an IP PIN number by mail. So they would get a letter each year that would have this IP PIN number, and it would be the letter CP01A. So it's a computer generated letter that gives them a new PIN each year. So that's the PIN program that's been around for several years. But the new PIN program that the IRS has initiated gives each and every taxpayer the ability to apply for an IP PIN, because it's like the multi-factor authentication with passwords. It is an extra layer of security, an extra layer of protection for the taxpayer. So taxpayers had the ability to actually go online and initiate an IP PIN for themselves for 2021. And this is a little bit different because each year the taxpayer has to go in and initiate that PIN, otherwise it doesn't happen. But once they initiate it and once that PIN is generated, then they need to let us know what that PIN number is in order for us to in order for us to e-file the tax return. Otherwise, we end up having to mail the tax return in using snail mail. So we may start to see some of these. I don't imagine there are a lot of them, but some people do really care a lot about security, and they should. And if they did, they may have taken advantage of this program and may have had a PIN generated for 2021. And if so, we need to know what that is. The due dates for estimated payments and for tax returns in 2021. The 2021 tax return is due on April 18th, 2022 for most parts of the country, but in Maine and Massachusetts, the tax return for 2021 is due April 19th because of Patriots Day. It's due Tuesday, April 19th, 2022. Estimated payment dates for the 2021 tax year were April 15th, 2021, June 15th, 2021, September 15th, 2021, and the last payment being due January 18th of 2022. Scope changes for tax year 2021. The Tax-Aide Scope Manual has been changed and will continue to be changed based on the fact that the 2021 tax return has a lot of different forms than in past years. So schedules 1, 2, and 3 have all been changed. The attachments to the 1040. So we're talking 1040 schedule 1, 2, and 3. Also schedule 8812, form 7202, form 2441, and many, many more that have been changed. So the scope manual, as you may recall, when you look to see whether something's in scope, it's based on which form you're dealing with. So if you look up a particular form, it tells you whether it's in scope or not, or in some cases, sometimes in scope, sometimes not in scope. So all of those changes have been done pretty much as far as what's known in December of 2021. But there probably will be additional changes, but the Tax-Aide group, the people in Washington, will take care of any updates as needed. Discharge of student debt. This is new for 2021 and generally not taxable from 2021 to 2025. There was a Form 1099-C that generally is issued in cases of when a debt is discharged. Cancellation of debt is the name of the form. And we suspect that the 1099-C in these cases probably will not be issued, but we're not absolutely certain of that at this point. And the discharge of student debt is in scope for Tax-Aide. Virtual currencies, sometimes called cryptocurrency or Bitcoin is one of them, is completely out of scope for Tax-Aide. Now, there is another program that's similar to Tax-Aide called the VITA program, which is under the IRS umbrella of free programs for people to get their tax returns done. The VITA program does allow for someone to hold, a taxpayer to hold cryptocurrency in what's called a wallet. So this is actually, they're holding cryptocurrency that they're not using for anything. They're actually no transactions being conducted using it. It's just sitting there in a wallet. So that's okay with the VITA program, but it's not okay with Tax-Aide. If any taxpayer comes to us that even holds a cryptocurrency, we need to make it out of scope and tell them that they either need to go to a VITA site or they need to go to a paid preparer. So now if there are any transactions that they have either on a brokerage report or anything like that, that shows that they actually used cryptocurrency for any transactions, then they're out of scope for both VITA and Tax-Aide. It's important when we interview our taxpayers during the intake interview process, that we ask them specifically whether they hold any virtual currencies or whether they have done any transactions with them. And if they give us any indication that they have, then we need to ask them to go somewhere else. So that's it for cryptocurrency. Inflation adjustments. Each year, the standard deduction is adjusted for inflation, and this year is no exception. So here we have the numbers for 2021. The standard deduction has increased in the case of a married couple or a qualified widow or widower. It's $25,100, up $300 from last year. Head of household is now $18,800, up $200 from last year. And single and married filing separately are $12,550, and that's up $100 from last year. Now, the additional things that we have to add to the standard deduction are for age 65 and for blindness. So in the case of age 65 or greater and blindness, we would add $1,350 in the case of married filing separate or qualified widow or widower. That's up $50 from last year. And in the case of head of household, we would add $1,700 if they were 65 or blind. And that's up $50 from last year as well. And then for a married couple, we would add $2,700 for the couple, which is essentially $1,350 twice. And that's up $100 from last year. Every year I like to include a slide that tells us what the standard deduction is for either a single person or a married couple over age 65 or 65 or older, because those are the taxpayers that we deal with most often. So these are the numbers that we really should commit to memory. So these are also the numbers where if the taxpayer does not have enough itemized deductions to beat these numbers, then they end up taking the standard deduction. So for a single person, the standard deduction for age 65 or older would be $14,250. And for a married couple, 65 or older, would be $27,800. And then if there was any blindness involved in these taxpayers, of course, you'd add an additional $1,350 for each blind person that we're talking about. So those are the numbers that we deal with most frequently, and those are the numbers that I suggest you commit to memory. The standard deduction for a single dependent under age 65 is handled a little bit differently than the previous chart that I showed you. So the calculation is done by using either the greater of $1,100 or the dependent's earned income plus $350, but not to exceed their normal standard deduction, which for a single person would be $12,550 in 2021. Just as the standard deduction has increased each year, the filing threshold also increases because the filing threshold for most taxpayers is in fact their standard deduction. So there are a couple of exceptions, which if you look at your publication 4012 Volunteer Resource Guide, look at tab A, chart A, you'll see exceptions in the footnotes under chart A and also chart C for other situations where people must file. And then also there are situations where people should file, and those are described in that chart C as well. The filing threshold is just as in the standard deduction is increased by age 65 or older, but filing threshold, you'll note at the bottom of this slide, is not increased by the amount for blindness. The threshold amount for determining the gross income for a qualifying relative has not changed from last year. It's still $4,300. So that's the number that we use to determine whether somebody qualifies as a qualifying relative. Each year, the standard mileage rates are also adjusted based on inflation. And the standard mileage rates for 2021 for business mileage are 56 cents a mile. Medical mileage is 16 cents a mile. Moving mileage for active duty military, 16 cents. And charitable mileage is 14 cents. Here's a chart for Roth IRA income limits for 2021 as far as what a taxpayer can contribute to a Roth IRA. And we need to note a couple of things here. One is the married filing separate filing status. Notice that if somebody is married filing separate, and if they live with their spouse at any time during the year, if their income, if their adjusted gross income was greater than or equal to $10,000, which of course is not a lot of money, they can contribute absolutely nothing to a Roth IRA. But see the cautions over on the right-hand side of the slide. Tax-Aide does not alert to excess contributions. So Tax-Aide would allow you as a tax preparer to actually enter a Roth IRA contribution for this person who's married filing separate and does not qualify to make any contribution at all. And Tax-Aide does not limit the retirement savers credit as well. So they would get, if you put them in for a contribution that they made, they would also get the retirement savers credit, which technically they don't deserve and they shouldn't be getting. So something to keep your eye on in the future. There are other inflation adjustments that if you're interested in them, you can look them up in publication 4012, the Volunteer Resource Guide, relating to HSAs, health savings accounts. If you go to tab E, the limit on long-term care insurance deductions on tab F, premium tax credit, the federal poverty lines are updated each year. So you can go to tab H for those, and advanced premium tax credit tab H as well. A few things that have not changed, one of them being the IRA maximum contribution. If you go to tab E of the 4012, you'll see that it stays at $6,000. And there is a $1,000 catch up for people over 50. So for people over 50, the people that we deal with most often, there would be a $7,000 maximum contribution to an IRA. Refundable portion of the child tax credit, which we talked about earlier in the previous slide, stays at $1,400 for those that don't qualify for the new refundable child tax credit in 2021. The educator deduction on tab E on the 4012, this is the $250 deduction for teachers and principals and others in the education environment that spend money out of their own pocket for things like pens and pencils and other things that they use in the classroom. They get a deduction of up to $250 for those things as long as they have proof of, as long as they have receipts for those things. They don't have to show us the receipts, but we always inform them that if you're ever audited by the Internal Revenue Service, you will need to show that you did in fact spend $250. So that's it for that. 2021 tax layer enhancements. Rather than get into the various details of what was exactly enhanced within TaxSlayer for 2021, there is a video which the TaxSlayer folks have already done for us that is really quite good. And so I've put some screenshots up here so that you can see where to go to get that video yourself. So you should all be pretty familiar with this screen here, the Practice Lab homepage. So rather than go into a tax return, you're not going to click on the Go to Practice area. You're going to look at these various blocks down below where you see sections 1, section 2, section 3. So the next screen I'm going to show you is going to show you the bottom of this page. So here is the bottom of the page where you see sections 4, 5, and 6. Now, the only one that I'm pointing you to is the recorded webinar number 5, the software enhancements in the bottom right corner. You've got a red arrow there that shows you exactly which one to click on. So that's the one that has a good video of the various enhancements. as of December. So I think there are probably additional enhancements since then, but we'll cover those separately if necessary. So if you've never watched any of these videos before, you will see this screen that comes up as soon as you click on the video, where they want you to put in your first name, your last name, and the program type. And the program type, as you can see, is the AARP Tax-Aide. So there's a pull down list when you click on the arrow to the right hand side, and you select AARP Tax-Aide from that list. And also, you noticed in red, remember me. Check that box so that you don't have to enter this information every time you watch one of these videos. So it'll automatically fill in the information for you when you just click on the submit button off to the right. And once you've done that, then the video comes up and you just have to click on the start, the triangle, the white triangle to start the video, and it'll run, and you can then, um, well, I'll show you in the next screen. So you watch the enhancement video and focus on the section of the video from minute 23 to minute 45. And the way you can do that is by dragging the red progress line at the bottom of the video to get to minute 23, and then watch it from 23 to 45, and then you can stop at that point, or you can watch the whole thing if you'd like. There's nothing in the video that I don't want you to see. However, the 22 minutes that I've pointed to are the most important 22 minutes that really focus on the various changes for 2021. A lot of the rest of the video is kind of irrelevant for what we're going to be doing this year. Although if your site is going to be involved in scanning and using the customer portal, which is new this year in TaxSlayer, then you might want to watch that piece as well. So you want to go beyond 45 minutes and watch the customer portal piece. My site will not be using that customer portal piece this year, but perhaps next year. So that's pretty much it. So what I recommend that you watch this video for enhancements to 2021, and especially the e-file section of TaxSlayer. The e-file section of TaxSlayer has been significantly modernized and changed to our advantage. So they've spent a lot of time working on that, and it's very different from past years. So those of you that are familiar with the e-file section from years past, you're going to want to look at this because it really has changed a lot, and it's much more streamlined and faster for us to use. So it should speed up the time it takes to do a tax return. So that's it for now.